start. Welcome everyone to the Person's Planet Q1 Outlook. This isn't about seasonalities because I think right now this year most of us has kind of experienced with the Trumpism trade and the lack of volatility and a lot of other dynamic changes in the marketplace on a global scale. Some seasonality is not working except for buy, straight up. And I think we need to address a few things, and that's what I like to take time out of the markets, begin our 2018 with a full schedule and things to do. And boy, I'll tell you what, we are kicking it off on the right foot this year, that's for sure. So thank you for joining us once again. As a reminder, let's just take a quick second to read this risk disclosure. Remember, there's no warranty of profits as a result of using these methods. This presentation is for education purposes in nature, but past performance is not indicative of future results. Stops don't work all the time, and this is a this is a product of personsplanet.com. All right, so let's get going. Many of you are already familiar with me, but I bring this slide up for a couple things. Number one, we put out a few books. This one right here, this guy has been around a long time. This one I can't believe was written 5 years ago. It was published 5 years now. The Commodity Traders Almanac, the last time we published that through Wiley was in 2013. It's another 5-year event. And we've had several different things, at least a lot of you guys are still using with good success, the PPS indicator on Thinkorswim and, of course, other platforms, Person's Pivots. We've created some scans. The Algo system optimizer has been an incredible success. It's an awesome feature, and we'll talk a little bit about that today. And, of course, I am a member of Aptus. So just a quick little review. I've been around a few 24 hours in the markets and started back in Chicago in 1977 as a runner, though, but then worked with George Lane in 1980. So many of you are familiar with stochastics, the indicator George helped popularize. Well, now that we get that out of the way, the only reason I even put that out, and you'll see why in just a minute, about especially those books, because there's a special announcement. There are some new developments happening here in 2018. Since this is the beginning of 2018, I thought we'd take a moment for different users of the products that I use and the brokerage firms that I trade through. I thought we would be nice to kind of first introduce what is going to be new in 2018. Well, we are going to have a launch officially of the PMC indicator on Thinkorswim. What is the PMC indicator? It's called the Person's Market Catcher Indicator. It is a relative strength indicator. We use it in Tradestation on the radar screen to help us filter out stocks that are in one of four modes: improving, lagging, weakening, and of course just ridiculously underperforming the overall broad market. So there are four different stages. It's a histogram, and I'll share a little bit about that while I'm, well, you know what, let's just do it right now. This is Thinkorswim. Many of you are familiar with Thinkorswim, and this is the PMC indicator. It's a zero-line histogram. You'll notice there's like four colors. When the histogram is fuchsia and pointing up with a yellow moving average, it means that that stock or instrument is starting to outperform the broad market. When it gets bright blue, it means it is outperforming the broad market. When we start to see it turn lower and being dark blue, it means that while the product is still outperformed the broad market, it's in a weakening condition. And then it is turning red, it means it is lagging the market. Last thing you want to do is be kind of long the market, see a PPS sell signal, and watch this thing go across the zero line. So this is going to help stock traders, ETF traders, to help to identify relative strength changes in the market. We gave a tremendous course out on this last year on how to trade this. It helps spot convergence patterns, bullish convergence patterns. It also is phenomenal in spotting bearish divergence pattern. So when you get into periods where a market may make newer highs, for example, and the relative strength makes a lower high, we get very nervous about that being long the market. And this is, again, the utility sector, which is something we've avoided from the long side. And as you can see, since November, and that's a bad arrow. But since November, it was really the 1st of December that we started to see the utility sector eke lower, and it's just succumbed to, of course, being interest rate sensitive. Is now everyone's saying, well, it's interest rate sensitive. But the fact is that this market started to underperform and weaken, and has continued to weaken against the broader market since the beginning of December. So this is a great tool for stock equity traders. We use it, like I said, on Tradestation for running scans, because we can utilize this color coding, whether or not the market is bright blue or dark red, to identify whether we want to be long or short a market, and if we do get a corresponding buy or sell signal. In fact, instead of telling you I'm going to do it later, we're going to do it right now. So on Tradestation, this is, I mean, many of you probably saw me just fiddle around with a couple things here before we began, and all I'm doing is showing you the radar screen with my indicators. This column right here where it says daily signal, it indicates whether a stock, and we have all of these stocks and subsectors of the market listed, of course subsectors, and then the stocks within that subsector. So all of a sudden, what flashes my attention is when we get these red blinking lights, that means we have a new PPS sell signal. That would be the arrow right there. Now what's funny is if you notice here, Lennox International, LLI, you will notice that it has a red strength indicator, and that's the PMC right there. So I'll just share with you what you saw, a different way of capturing the concept of the market. So this is Lennox International. This is the PMC indicator. As just like the utility sector, as it starts to make newer highs, and all of a sudden you start to see the weakening effect of the relative strength, it makes it less likely that the market's ready to push and thrust and maintain newer highs. So this will keep us away from buying false breakouts or weak breakouts, and that would be indicative of the relative strength weakening against the overall market, which would tell us to stay the heck out of town on that particular stock. Unless it starts to show improvement in its relative strength, and it starts to increase and then go from negative, and then it starts to get, as you can see, the different colors. There's 4 colors: bright blue, dark red, and fuchsia. And that helps to identify the stages of outperform, weakening, lagging, improving. And that's the cycle. So when something starts to go from making newer highs, it also helps us to identify divergence patterns. Last year, I'm not sure we shared this with you, but one of the more famous descriptions of relative strength in using this indicator was in looking at a company, by the way. I think you all remember the famous identification of, I'm trying to get it up here, Warren Buffett was his name, I think. And Warren Buffett let everyone know, and we have this still highlighted because it's just absolutely fantastic information. A very powerful tool. 2 things that we look for, even in my own trading, what I try to put out is stocks that tend to generate newer highs with weakening relative strength and a decline in volume, and this is a special volume indicator here. When we start to see newer highs pop up in a market and the relative strength is flattening or weakening and volume is going down, as you can see, the volume trend is moving lower. This gives us an idea that this trend is weakening and this is not a stock to be looking to go long. Well, as it turns out, you may remember in a very famous interview, Warren Buffett with Becky Quick on CNBC. Now, this wasn't that long ago. This was just half a year ago or so. He came out and announced, yeah, we kind of liquidated 30% stake of IBM with Berkshire Hathaway. And when Becky said, oh, whereabouts? And he just lightly took his little hands and fluttered in the air and in a nice little grandfatherly fashion said, oh, I don't know, somewhere up near the highs, near that 180. And if you look at this market up in here, this is an institution absolutely throwing out their trades on every rally, and that's why the volume was going down, because there was no new buying in the market and the relative strength was weakening. So that was a good tell of what institutions were doing. Berkshire Hathaway, this is a fantastic idea of what we would look for in a trade using the PMC indicator. So once again, this is what's new for 2018. It's going to be, now this is available, I'm using it, I have it, but it's going to be available for those in, we believe it's the a Q1 release of how to utilize as a confirming tool of whether or not a market is running out of steam, whether a market is running with the dogs, kind of say, or getting ready for rolling to the downside. So that's what's kind of coming new in 2018. And as far as Tradestation is concerned, VIP Pug members, it stands for Persons User Group. So if you're a Tradestation VIP Pug member this month, this is kind of cool. We have a Pug meeting next Wednesday, by the way. So for those that will be around next Wednesday, if you got questions, if you're a Pug member, get your questions together on anything regarding Tradestation application, regarding the person indicators, but Pug members, and I'm hoping to get this to you by next Wednesday. So make sure you're in town, and if it's cold and flu season, which it is, and you know, take some of that Dayquil or Tylenol, Johnson & Johnson product, of course. Take some of that cold and flu medicine and show up next Wednesday, or get to your doctor and make sure you get some Tamiflu in you, because it's a nasty little bug. Because you want to show up next Wednesday, and the reason is we are launching what's called the John Person, the JP Trilogy buy and sell scan, and it will be available on the radar screen. So this is kind of exciting. What does that mean? It's another way of filtering out buy and sell signals, and I'm going to share that with you real quick. I told you I'm going to go do this one by one, bullet point, what's new in 2018. If you see the Trilogy buy, in fact, right now, if I'm not mistaken, double check, this would have been, today is the 10th all day long, right? The scan's already completed for tomorrow. See, this scan ran at 4:08 in the afternoon. So tomorrow, American Airlines is showing a what's called a Trilogy setup, or a last conditional change, which is this line in the sand. Note with American Airlines, it's in a weekly buy mode. So we have three things going on. It's in a daily buy mode, but it broke above a major resistance target, and that's what we call the last conditional change candle. So we can take a little bit further evidence and see, is the relative strength improving? Is there some decent volume? Is the market in an uptrend? Is the sector looking good? Are we getting ready for an upside swing? And if so, make a little determination whether we want to buy that stock tomorrow and maybe place a stop underneath the support level of the marketplace. So this is the further scan. It's a filtering method. This is CenturyLink. Did the same kind of thing. It did what we would consider to be an equal and greater, meaning the market went down and then it went right back up, but it closed greater than resistance. It is in a weekly buy and it's in a daily buy, but it this time broke out above prior highs. So this would be a consideration for further upside. Relative strength is still good. Volume perked its little head a little bit higher. Next, final, last but not least, there's Delta Airlines. Delta did a little last conditional change. Delta being a second airline in the group, American and Delta, is in a daily buy after today. And if you'll notice, here's a little gray resistance level, and it closed above its resistance. So it's in a daily buy, weekly buy, and closes above resistance, a Trilogy setup. So that gave us there, coals. Now, this is kind of a sore subject because we were long coals since around 41. We trailed our stop, and they did the old dump before the pump and stopped us out just about right here the other day, and then continued higher, and here we are. So will I chase coals? Probably not, because I'm still expecting longer-term resistance to hold in there, and I generally try not to chase markets that start to show volatility after big runs like this. So that's a weekly analysis. So basically, using this tool, it helps filter out, and I can just take a quick glance as to what stocks might be a little bit better for trading tomorrow. Now, here's an interesting one. This is this Trilogy sell signals for tomorrow. Ball, ConAgra, Campbell Soup, yikes. I mean, some of this stuff like looks just, obviously that's ugly. So maybe, it's in a weekly sell mode. It's having follow through. Equinox, Hershey's in the consumer staple, Kansas City, Southern, a rail company. That doesn't look very friendly considering other rails have moved up. Mattel, maybe they're not going to get paid with the bankruptcy, or people won't buy as much toys. I don't know. But either way, it doesn't incite a very bullish pattern and is not giving me something that I'd say, gee, this thing is not a strong momentum buy by any stretch of the imagination. So, I mean, looking at some of the stocks in the S&P 500, here's Mohawk Industries. Today was an ugly day for Mohawk. It definitely threw out an engulfing pattern in candlestick lore. The relative strength looks weak. Let's take a look at this real quick. And you can clearly see that since December, the beginning of December, the relative strength has disimproved against the market. It hasn't gone anywhere. So until the relative strength starts to get more positive and until the volume starts to kick in, I wouldn't touch this stock with a 10-foot pole right now. Marsh McLennan, NRG, a utility company, Procter & Gamble, which is really surprised about Procter & Gamble, and I'm going to tell you why. They're the parent company of NyQuil, and with the epidemic of cold and flu season, I'm surprised they're not selling more NyQuil. But there is competition. People use Tylenol cold and flu, so Tylenol is a Johnson & Johnson company. Looking at PG, a consumer staple product, they really haven't done a whole lot in the last year, or 2 years for that matter. It's been kind of wasted money except for dividend return. Not a lot of capital growth perspective. What I would be looking for from a technical perspective, just to run through these scans and how I use the indicators, look at the relative strength. The relative strength has gone negative. How in the heck do you want to be long Procter & Gamble when you can't even get strong relative strength against the market? You're not going to find momentum traders. You might find some bottom pickers, but we're not going to find momentum traders willing to buy this until it starts to show strength on good volume. You can clearly see the volume is trending lower. This is my volume indicator, and I'm just showing you the style of analysis that I look for helping me to detect changes in market valuations. And with that said, you can clearly see these peaks in volume, and as the market's making a higher high, it's showing bearish divergence, and you can clearly see that the relative strength, the PMC indicator, let's highlight this a little bit. If this is the PMC indicator, and you can see from peak to peak and new highs in the market, and you can see that that is a weakening indicator against a higher price. It tells you that there's not to buy that breakout, that this market is relatively weaker compared to the overall market. A rally on light volume and poor relative strength tends not to move higher. I'm not saying this is a guaranteed, but it certainly gives us an edge. Let me go back to Tradestation, or Thinkorswim, excuse me, and let's punch up PG so that when you guys do, for Thinkorswim users, just to share with you the concept, as you can see, the same thing. I just want you to point out, as you look at the indicator, and then it has a slight pullback. Some might think, hey, this is a great stock. It's trending higher. It's going up. But if the market internals comparing the relative strength of P&G to the overall market is weakening, it may keep you from saying, yeah, you know what, I want that thing to move up, and then we can follow up with a little bit more on volume ideas. So these are technical tools that I think are, as we started off, what's working and what's not. And so when I tell you, here's some really neat things that are happening, I mean it. And so the Trilogy buy and sells, and if, I think that we need to be a little bit more sophisticated because institutions are more sophisticated. There's more things to trade. There's all kinds of ways of trading the markets. And I think that, it's not going to get less sophisticated through the months and the years ahead. I mean, what has changed in 2018 compared to 2004 when Candlestick and Pivot Points first came out? I mean, it's amazing what's happened since last May, Jerome, when you were attending my May seminar in Las Vegas, and you went to that coin show, and you gave me that little medallion of Bitcoin. Remember that? What changed? Well, Bitcoin took off. Marijuana stocks really started to get more in the limelight. So, I mean, there's just incredible changes that have occurred, and I don't think the pace of change is going to slow down as 2018 ramps up. So, when we say that what's new in 2018 so far, the PMC indicator, I think, is a very sophisticated tool that's going to help individual investors get more out of determining what stock against the overall market might give you a better rate of relative strength identification and help give you better entry and exits. So that's number one between Thinkorswim plus the Trilogy buy and sells for Tradestation. And by the way, the Trilogy buy and sell scans, if you see it on my screen, it means it's there. So we have it, and it's just not been released. Now, this is the Trilogy sell P&G, and then last one, this is for tomorrow, Weyerhaeuser. I mean, this does not show, this is a great classic way of examining markets and in content of what we were just discussing. If you go back and you look at Weyerhaeuser, as this stock's breaking out to the upside, now I'm not really good with this drawing tool, gang, because it's off a mouse, so my bad if it doesn't show a great straight line. But as the stock started to appreciate and make and break out to new highs, the relative strength was weakening, and you can clearly see it went from the bright blue bars to dark blue bars, and look at this volume indicator over here. It's trending down. It is trending down. And then all of a sudden, you got the relative strength went negative, and this is not an area or a stock that I'd be looking to buy whatsoever. You know, I may entertain a stock that's starting to improve, but it needs to break out above a last conditional change, that gray line. If you see that gray line, if it breaks above an old resistance, I may look at that and say, what does it look like? Its relative strength is improving. As it starts to break out, is the relative positive? No. Is the volume gone positive? No. So do I want to get into that trade? No. And here we are in another weakening situation. So again, that Weyerhaeuser is, even though it's a paper company, it's listed as a REIT, and it's obviously REITs are having a little bit of a trouble event right now because of their sensitivity to a rise in rates. But anyway, this is kind of ironic that the relative strength never turned positive on the market, and yet here we are 2 days later, right back down. So again, not perfect, nothing's perfect, but it certainly helps to give us an identification of, is the rally more sustainable? And I think that's going to be an important tool as we get through 2018, as the months develop, mainly because we've seen just an enormous move in, as everyone knows, unless you've been on outer space in Mars, a very incredible year. When you talk about incredible, this is a company everyone's probably familiar with called Caterpillar. The sad news here is it's a great life lesson. Last year was the year of holding on to winners a little bit longer than you're used to, and that's the message that I walk away with. Even though we had a pretty outstanding year, and it was a wall of worry all the way up. Stuff like Caterpillar, when I was buying it in the 60s in 2016, when everyone said to get out of it and sell stock, and we were buying Caterpillar in here, and then talking about an inverted head and shoulders pattern and the measuring objective up to around 90 or so, and looking at the momentum and the volume going up and all that wonderful stuff. And then we look at this thing go parabolic, Caterpillar. Last summer, just to give you a reference point, last summer when the stock was trading, I think right around this 100 old resistance level, somewhere right in here, when the FBI raided the company headquarters in Joliet, Illinois, and the stock didn't move any more than, like, I think 2% to the downside, that right there was a tell that it was invincible. And, you know, a stock that doesn't go, when you got the FBI raiding a corporate headquarters office and on national TV and the stock doesn't move any more than 2%, obviously there's, I shoulda, coulda, woulda is the story there. Now, why do I bring this up to your attention? Because when I start to see stuff like this, while I know a lot of people want to sell, and even I've been looking for this stock to run out of steam, I sent a tweet out the other day that it was trading at around 67 for the high, and 69.51 is a massive quarterly pivot resistance up there, 169.51. So when I say that a relative strength indicator, how does that kind of help us and work? What it is doing and what it has done so far, especially combined with volume, as we've seen Caterpillar run up in this last leg, the relative strength went bright blue, and as you can see, it's made a newer high, and the relative strength has kind of gotten into a level that's plateaued. And if you notice here, the volume indicator is starting to show some divergence. So with a double doji star up in here, Caterpillar is one that may succumb or be subjected to possibly the mid-January profit-taking correction. And I'm not sure we're going to 150, but maybe a correction can come in several phases. Sideways, like it did before, to down. So at this point in time, I just know that based on this, while I did not participate on this leg up in Caterpillar, I stayed away from it, and I would continue to stay away from Caterpillar at this point in time until the volume short-term started to improve and maintain the structural integrity of that massive price gain in the marketplace. So again, relative strength started to show, hey, you can't get short. You may want to sell something because it's high. And just because it goes high doesn't mean you can sell short. We should all remember the events of 1998, 99, 2000. Market can go up a lot longer than we can stay solvent trying to sell all the way up. And I've taken some stabs on the short side using options on spider put spreads. And trust me, they haven't worked out very well. So I'm not alone as a trader. I've had opportunities to take short side of the market in limited risk, defined risk strategies, but not outright selling stocks and being aggressive, foolish in that regards. And we've been constantly looking at long opportunities in segments of stocks. And that's something that I think these indicators have helped me to maintain identifying good performing opportunities as far as a risk and reward. We always can say, hey, I should have bought that, it was great. But when you look at buying something on a breakout at 140 and your stop needs to go $10 down below, that to me, I'm not sure if I'm interested in that kind of a risk to a potential, short-term reward. So again, risk reward is a realistic part of the program. Hindsight trading, everyone says, hey, look at this is a great trade. In hindsight, but when you're out there and you're looking at your stock and you go, yeah, but I still need risk because not all stocks are going up in this market. We've got many examples to prove that. So again, what's new coming out in 2018, gang? Thinkorswim, we got that PMC. It's going to be fabulous for commodity traders. It's going to be great for trading the indexes. It's going to be great for those that are trading individual stocks and should help us through earnings season, which starts Friday with the banks, right? Next, Tradestation, the Trilogy buy and sell scans. We're going to have that in everybody. In fact, just as a quick reference, it will show up. We're looking at programming this, by the way, and right here, that's why this box, we're experimenting with that today. Where should we put the Trilogy buy and sell? We don't want to get rid of the daily high and low close doji indicator. We don't want to get rid of the daily signal. We just want to put in a Trilogy, a TRIO, right in here in that box, and then we're just going to say bullish, bearish right here. And I think that will be, or up, down, something like that, or bullish, bearish, LCC, bull, bear. So bull, bear, if you get a bear and you get a down, PPS down, it means it closed below a support, and that's even more bearish, right? So if you get a buy signal and it's above a last conditional change resistance, it means it broke out above resistance, and it gives us a better state of reference that the market might be able to see follow-through strength. And I think that's going to be a really exciting addition to the person trading system, since we use that for ourselves. So again, that's going to launch again by next week we'll have that Trilogy buy and sell scan available for everyone on the 14th when we meet again here Wednesday, excuse me, the 17th. All right. Person Algo version 14 will launch, and this is the Algo optimizing. Many of you have probably been seeing this generate trades and giving out buy and sell signals, whether it be bonds. Again, if it's red, it means it's a loser. If it's blue, it's a winner. Short, and then this is today's action in the Treasury bonds. Looking at the VXX indicator in the mini Dow. This was the trades today. This is the overall equity performance year to date, trading 2 lots. What are we doing with this product this year? Well, what we're going to be doing is a new version. This is the VXX system that we use, and year to date, or excuse me, lifetime of 2010 to 2018. Performance graphs, pretty good. Performance summary, not bad. I think a lot of you guys are pretty interested in this. This is short-only version, just short-only version, by the way. We don't have enough time to get into that right this minute, but about why is it short-only. But buy and hold return versus the system itself, and why is this an important feature? For everyone that has the Person Algo Optimizer, you did get the version of the VXX. When 14 is released, and we're hoping 14, Person Algo Optimizer. This is very important. The Algo Optimizer, which allows us to format strategies. And let me get this up here real quick. Let's go and format strategies. This is the current version. It says Person Algo System. That's the one everyone has. What it allows us to do is it allows us to start when we want to trade and end when we want to trade, meaning don't take any more buy or sell signals after 2:30 in the afternoon. Get out at the end of the day or not. And this is on false, since we can trade this market through the after-hour session. Position calc method. In this version, I always use 2 lots. This is only trading 2 lots in the mini Dow contract. So we can change position calc method for position value of $10,000. Risk, I change this to 1, and it's going to trade only as many contracts up to $10,000 as possible. So with the mini Dow, it would be 2 contracts anyway. On a position risk, 1,000, it will max out at the 2 contracts because of the margin requirement if it's a $10,000 basis. And we just keep it at position size 2 contracts. It has a max function that you can optimize. How much of a loss on an intraday basis should you take on a trade? If something goes wiry, I want to punch out of this thing at a max trade loss on a daily basis of $525. Just in case something crazy happens, $2,350, take the profit and run. Don't take any more than 3 losers every single day. There's some other things like trail the stops when we're near profit targets, entry level, stop loss ticks, risk reward ratio. All of these features here you get to optimize, and that's why it's called the Person Optimizer. Buy signals, PPS, I can define this as I only want to take sell signals. I don't want to even take a sell signal. I want to take buy signals. I can turn that on and off. So what's the difference between the one that everyone currently has and the Person 14? Person 14 is going to allow us to use the last conditional change. In other words, do not take a buy signal. Do not go long unless it closes greater than resistance. Don't go short unless it closes lower than support. And that, my friends, I think is going to be pretty dynamic. By the way, that's what the white line is. It's a support. And the gray line is a resistance. So those are the last conditional changes. When a market closes greater than a resistance, the odds are that the trend will continue. So what we want are a product that can get me in. It will trail a stop. It'll get out. Now, you can clearly see here, while the performance, this is year to date, and I'm just using the Dow, and I put this up on our YouTube channel just to share with you. This is year to date, 1/2 of 18 through today. So just since the year to date, trading 2 lots, this is just a quick day trading system on the mini Dow. This is the regular version Person Algo Optimizer, and for everyone that has the Person Algo Optimizer, when we have a new release, free of charge, the only thing I have to do is go in and redo the videos, and you will have an opportunity. So I'm just giving you a quick heads up. You will have an opportunity whether or not you want to change the settings or use the old version. So if you've already created your own trading systems and trading strategies and you don't need the new one, then that's no problem. But you can always go and hit Insert Strategy, and then you will be able to go into, and we'll call it something, but you'll be able to go to version number 14. As you can see, we've had several different versions here, and you hit OK, and then you'll see that we have version 14. All you do is move it up, and then it will inactivate that particular strategy. So you'll have a choice. You won't get rid of any of the old settings that you have or systems. You'll have an option to change anything, which, by the way, this was, I think I just accidentally changed things, so I'll go back and undo everything. But this is something that we started to provide investors was before Bitcoin futures became popular. We've been doing this for quite some time. It was the GBTC hard to borrow list, but it's a great way of trading up until the futures came out, the Bitcoin craze. And this is something that we've been doing for quite some time. So in any event, this is what's kind of exciting about 2018 for us. For Trade Navigator clients, we updated files for all the seasonal commodity spreads that are available that we've been doing. And then coming up in the third quarter of 2018, we're going to have a managed account system on the VIX, and clearing will be available through, we believe, working with TOS as well as Interactive Brokers, IB, for limited accounts. Also, we're going to have a trade system on crude oil and gold for public release for those that just want to be in a broker's hand and take the signals. You'll be able to do that for yourself with real-time back-tested performance with live money, and that's going to be launched on third quarter of 2018. So we have a lot of great things happening here, and it all kind of started with my career back in 1980 with George Lane. But most importantly, I would just want to point out about everything that we've just gone over was released in that book right there. It started it all. It started the wave of candlesticks and pivot point trading triggers, the last conditional change. All of that started right there. So here's what's new for 2018. The second edition. It's been under contract to do for about 2 years, and the publisher's a little upset with me, but it is going to be done, and it'll be out with really neat new things and ways of trading due to this algo world that we live in. So I'm kind of thinking this is going to be some exciting things that are turning for 2018. Last but not least, this is going to be exciting. We're in the midst of doing this, so this could come out a lot sooner, but this is for the VIP. If you have the VIP, we're going to be working on the divergence and convergence for price and volume using the person volume indicator. And that'll be pretty slick, believe me. So that would be the last thing. So we just want to look for divergence and convergences and follow up with that. Point them out to me. That's all I want. That's what I want to trade off of when I get those. Therefore, we're going to have and work on that. So that's what we have intended for 2018, and that's a lot on the table and some exciting things to help investors in what I think has been a really fast-paced changing world. So when we say a fast-paced changing world, what, where, and when we trade has absolutely changed. I mean, companies, products, time periods, platforms, mobility, locations, they've all changed not just in the last year, but over the last 10 years. I mean, the CBOT is no longer CBOT, it's CME. Products, I trade more non-standard historic products now than I ever did before. Case in point, VXX. That hasn't been around that long. I mean, think about it. I mean, how many, I don't even think I traded a corn futures contract in the last 18 months, to be honest with you guys. And I mean, corn used to be a very dynamic product to trade. So the funny thing is we've traded GBTC, a Bitcoin exchange traded fund. We've traded FAS, FAZ, the financial inverse and leveraged ETFs. It just goes on and on and on. TNA, TZA on the small cap Russell. I mean, the list goes on and on. What we used to measure value and condition, I would have to say, is not as applicable in today's trading world. What do I mean by that? There's a lot of different things that have changed in the rapid way that investors and mutual funds and fund managers can move money around nowadays. And I think private funds, wealth managers, in the list of registered investment advisors has shot up. Different assets for money management. It's just incredible if you think about it. I was talking to an old friend who's in the wealth management field with Merrill Lynch right now, and he was saying the demand for guys as we got older from all of these friends and people that he knew that lived in Lake Forest, north suburb, a very affluent suburb of Chicago, and he was telling me, you know, some of these old floor traders are ripping through their life savings, and they don't have any health care plans for retirement. It's just amazing because they just think they're going to live forever. I mean, that was kind of if you think about it, I mean, the fast-paced changing world, and you look through the internet, and you look at all this cryptocurrency ads that are going through. Everyone wants to get rich quick, and you know, sometimes get rich quick means don't spend as much. It's real simple. But products to trade and things to do is beyond just what we're looking at, you and I, today. Technical tools requires a little bit of adjustment due to what I call the new millennium shift. And that is what we wanted to focus in on. If you think about it, what's changed? We now have more volatility products. You have cryptocurrency, Ethereum. There's so many, I can't even list them all. You know, you have, besides that, you have all the stocks, the subsector stocks that run not just the cryptocurrency, but the blockchain technology. Pot. I didn't want to spell out marijuana, but pot stocks. I mean, Insys Therapeutics, and there's a ton of them out there. All hard to borrow to a degree. I'll share with you what I'm referring to. We actually created a subfolder on pot stocks. This is Emerald Health Therapeutics. This is obviously not the E-mini S&Ps, even though it may be smoking pot the way it's moving. So we'll try and get rid of that. Doesn't belong there. Delete. There we go. You can take a look at Aurora Cannabis. This is the one I was referring to. We did a little bit of write-up on the Insys Therapeutics. You know, Kronos Group. Everyone knows about Scott's Miracle Grow. I mean, I use it for the roses, for God's sakes, let alone the medical marijuana or marijuana growers use it to really get some growth prospects. And then there's, I'm not sure about this guy here, but you know, he seems Canopy Growth Corporation, all trading. And here's what the amazing thing about pot stocks is: look at the volumes on it. And this is, by the way, the a volume on an average measurement of the last 10 days. In the last 10 days, 2 weeks. So we're talking since the beginning of the year. The average volume here, 3.9 volume. Today was a light day, 2.8, but 3.9 volume in the last 10-day average. 1.5, 400,000, 500. I mean, guys, that's pretty amazing considering Bud, as in Budweiser, trades about 1.4 million shares. Or Post Cereal in the cereal, 815,000. You got more people wanting to trade pot stocks, and I think one should go with the other. You know, if you get the munchies, you go with Post Cereal. Anyway, all right, bad joke, my bad. What's the point? We have more things to trade. When I say there's more things to trade, there are more legitimate things to trade and ways that we can put our money to work. When I talk about leveraged ETFs, I mean, whether it's the semiconductors, whether it's the biotech, whether it's gold miners, financials, whatever I want, the dollar, UUP, for example. And again, volatility products, whether it's UVXY, TVIX, the SVXY, or my favorite, which we created a system on, the VXX. Guys, it's all there. I wanted to make sure that we all had an understanding of what I meant by what we trade has changed. We no longer are looking at a small universe of stocks. We have more and more expansion between stocks, stock indexes. Is it momentum stocks, meaning what's the breakout trade today? Is it Roku? Is it NVIDIA? Is it Apple, Facebook? Foreign stocks. I mean, my gosh, foreign stocks, foreign ETFs and ETNs. And look where the list goes down. Then we got commodities, Forex, and no wonder options, I think, while we still have decent trade in options, everyone would probably agree, if you're an option aficionado, you would probably agree with me that the year of 2017 was a year of incredibly insane wide bid and asks, and the volatility was less than stellar for options traders than we're normally used to over the last 10 years, for real. So I think this is something that we have to identify, plan ahead. I mean, we can give out trade after trade, and we throw out tweets all the time as to what looks good. But gang, I think if we're all, waiting for something to happen, we need to prepare and start to anticipate what the changes are going to be. The one thing that we know has changed is the ability of institutions to change a trade from one day to the next. What goes down one day goes up the next. It's that sector rotational grind on steroids. But eventually things will change. And the one thing that's going to probably change is the big F word versus the big M word. And that is the division between fiscal policy changes, and monetary policy. And monetary policy, as we start to see, the party is getting pretty much full-fledged into the upside here, with monetary policy being at a point of changing soon, not just here, but abroad. And eventually, governments are going to have to, or at least central bankers are going to have to start to unwind that quantitative easing. And we better be prepared for it, because if this is the rate of change of way markets can trade in a flip of a dime with low volatility, imagine what's going to happen with the computers taking over when volatility starts to spike. And, odds favor volatility will start to spike sooner rather than later, we all hope. I still feel that my trading methodology works today more so than it ever has. We have just ways of getting the information a little bit faster. I think the PPS buy and sell triggers, easy to scan, whether you're using Thinkorswim and you're going up to scanning on Thinkorswim and just adding that filter and looking for how many stocks are giving maybe, and they have a phenomenal listing of segregating where you want to run scans, whether it's S&P, the Russell, whether it's, and just taking a look at S&Ps, we could just take a quick look and find out for today, for example, how many stocks generated a new fresh daily PPS daily sell signal today, and what was the heaviest sectors of the market that generated those signals. And funny thing is, you had semiconductors, top of the list, generated more daily sell signals, and as we go down, a couple generated some daily PPS sell signals in oil and gas. Occidental, Devon, and Cabot Oil and Gas, COG, and that is oil, gas, consumables right here. So when we say in the S&P 500, there was only 56 names that generated a daily sell signal, a PPS sell signal, it doesn't really give me a whole lot of confidence that that the whole sector or the whole index is going down. So we can kind of take a look and see how many stocks in food products. And you can see Schmuckers, SJM, McKesson, Mondelez, Kellogg's, Hershey's, General Mills. When you see those big guys all selling off, that is not mom and pop America selling stocks in that sector. That's institutions. And more importantly, when I start to see 2%, 1.5%, 2.5%, 2.5%, and they're all down about the same or about near the same percentage, it tells me that that is more of an institutional flood of the market, that they're liquidating and going out of one sector and into another. And you know what? We want to be on guard for opportunities coming soon in the consumer food staple group. But in any event, when I tell you that PPS buy and sells, easy to scan, my methodology is still working. High close, low close, pivots, and of course, we kind of gave you the inclination of relative strength, and as well that LCC. And that, I think, is not just an important feature for trailing stops on trades, but also for identifying entries on breakouts. Number 11, if you've ever been to any one of my webinars, or more importantly, a seminar, this is my 12-step, I don't want to call it a 12-step program, but these are the 12 bullet points, only because I don't have 13. And I do use volume analysis and volume indicators. I still use seasonal and cycle analysis. I still look at chart patterns, such as W bottoms, a W bottom, or a inverted head and shoulders bottom with the neckline. Those are still consolidation and bottom patterns, and the opposite, the inverse, is true for M top patterns and inverted or head and shoulders tops. So those are still very important elements for my trading, and I thank everyone. I shared you if what we didn't work, we wouldn't get this type of equity curves out of products. This is the volatility index. I didn't want to get into a specialized class on this, but this is a specialized class because it is, I think, the amount of trades that goes on in the volatility products has taken away the need for option hedging. And that's kind of very important. How long is this train ride going to last? I don't know, but what's really neat about this is as long as there's going to be a need for protection on volatility, and traders believe that, and there's volume in it, then it's just a new asset class we all need to adjust to. And that's the thing about education. You know, you find out what's new, you see if it's applicable, and you follow through with it. And I think in this era, this is one of the main products that have taken away from volume in options trading, is the fact that we no longer need to hedge by looking at put options against a long stock or stock index product. So this is looking at this VXX, is if you take a look at the performance on this, and whether this is short only or there's the long and short version, but if you take a look at this, would you be happy if you took $100,000? I mean, think of this. If you took $100,000, now there is no guarantee, but if you took $100,000, would you be comfortable with this type of return every single year? I mean, some years, obviously, in 16 was not a good year, but only a 7% rate of return. But I mean, almost every single year has been, even year to date, is already up 7% on $100,000. I mean, it's crazy, right? So, but all I can tell you is that I think if this is something that's a moneymaker, you know, the trend is your friend until the trend doesn't work anymore. I think that's the moral of the story. What is so neat about this product? Maybe that's why there's so many hedge funds using a volatility product, by the way. And what I think is kind of interesting is if we take a look at the VXX, I want to share something with you. Look at the 10-day average volume, 33 million shares. Today was 34 million. This is not a small trade, and it's not one guy trading this market, man. That is liquidity. I mean, can you imagine 34 million trades today? 34 million trades today. We might be trading the XBI, the ITB, the GDX. Look at some of the volumes here that took place in some of the major sector ETFs. The Russell did 17, who cares? I mean, 17 million versus 33 million. That's pretty crazy. Now, it is, just to let you know, it's priced slightly different, right? $154. So we have to take that into consideration when you look at the volume of shares that were traded. But overall, oil sector ETF, 8 million. Guys, this is obviously an eye-opener that says, you know what? That's some pretty sizable volume that's going into a product. A product that's destined to do one thing and one thing only every single month as the contango takes over. And its job is to go down every single month. Even every once in a while, you get little spikes in volatility, but it still goes down. A spike in volatility, and it goes down. A spike in volatility, and it goes down. And what's neat about this is because it's an exchange-traded note, when it gets down too low, you know what they're going to do because it's an ETF? They're going to do a reverse split again, and they'll just reset the damn thing right back up. And they've done in the last couple years, they've done 4 splits on this. So if you're not familiar with the volatility product, it may behoove you to learn more about it. So that's kind of like, why are we focusing on the volatility product? That is the number one reason. So in 2018, we've got a rate of measurement that I think nobody on the face of the planet still has abandoned. They still use it. We have different indicators, moving averages, oscillators. We've got pivot points, my favorite, and Fibonacci, and everyone uses now Fibonacci. Everyone knows Fibonacci. Volume analysis, and this has been one tricky topic, volume analysis, and I think tracking volume trends has been a little bit trickier, even with my friend, the on-balance volume indicator. It hasn't been as efficient in 2017. My volume indicator, and I don't know, I think I left the cat out of the bag, but this volume indicator, gang, what's working, what's not working. This is the on-balance volume. And this is a volume indicator that takes as part of a histogram, it uses momentum, but instead of turning like a on-balance volume using up-down days and registering a cumulative volume change, net positive or negative, this just takes the change in terms of percent. It's kind of a different concept. So instead of real value, it takes percent change value. And that was one of my concepts of putting that volume indicator together. And what that does for me is it helps to distinguish, and it gives me a little bit better gauge, and I'll see if it shows up here, in a lot of different markets. It gives a better idea of showing and reflecting not just the volume change, but the percent change in volume. So as you can see, the on-balance volume doesn't do a whole lot. And in here, you can see one of the false sense of security, it's taken place. And so when we talk about what's changed, look at on-balance volume. It made a new high. And so those folks that are using on-balance volume would say, hey, this market's looking great. Well, I would say, you know what's changed in 2017? On-balance volume is less effective tool as it once was when I started teaching how to use this thing back in 2008. And here's the thing. If you look at the term in change of percentage, clearly there was a difference in volume reading. So as you can see, it does show a volume divergence. So now you probably understand, well, John's looking to create a setup, a signal on his volume indicator showing divergence. Yep, market went up a little bit and it came right back down. It didn't have sustainable strength in the market because the volume is not moving up on higher trend. The inverse is true, and we can take a look at this. This is just Lennox International. Newer lows in the marketplace. Look at this. Newer lows in the market. This looks weak. The volume indicator made a newer low, correct? My indicator made a higher low. What does that reveal to you? Hey, the market went down on less than strong volume. It actually made a convergence pattern. So I would be looking for that as convergence and then watching that relative strength. So I just wanted to give you, I just picked Lennox because it was the first one that popped on our screen today. I mean, we could sit here all day long and do this, but I wanted to share with you, when I say rate of measurement, what's changed, what needs to be altered, that's one of the functions that I think we need to pay attention to. And because of so many things have happened, and liquidity's become a little thinner. We see this in bid and asks widening. Today, by the way, I don't know if you guys were trading. We were trading live in the room, and the system generated a buy, and in the mini Dow had a 3-tick slippage on a market order, which I have not seen a 3-tick slippage on a buy order in the mini Dow. The Russell actually gapped between a close of a 5-minute bar to the next one by, I think, about 40 cents. That, to me, was like everybody going into the market all at once was more computer-generated signals. And so what's kind of interesting is I don't think that's changing. We better get used to understanding that, because I don't know about you guys, I had a trade this week in the weekly thoughts and observations. And we're going to wrap this up right now, and I'm sorry to take all day on this, but our time together. But I wanted to share with you on the weekly thoughts and observations for this week a couple things that we put out. This is my little newsletter that we put out, and through the years, I just put out my observations of the market and pivots, and we'll just go down here real quick, because here's just to give you an idea. I'm looking to buy some of these stocks right here, but I'm looking to buy them a lot lower and to scale in. CVS, Kellogg's, Baker Hughes, GE, Hess, and I want you to take a look at this one, GE, because this one was kind of irritating, and I'm going to show you why. We were looking at a correction, and I'm looking for the market to move back. You can see I use the term LCC, resistance level, and you see the word seasonality, so you know I'm still using the same old, but I'm using it a little bit better. Now, I wanted to share with you this entry here, and why is this irritating? Real quick, let's take a look at GE, and I'll share with you why was that irritating. Let's use Thinkorswim, and we go GE, and we have GE, and you will see that on a weekly basis, the market has poor relative strength against the overall market, but what you don't see, because it's not available, this is a last conditional change. This is a doji, and that's a high close doji. But between the low and the close, we were looking for a slight pullback to buy at 1802. I mean, that's a pretty reasonable pullback to put out in writing before the market opens, and do it on a Saturday so it's in everyone's inbox and they can kind of take a look at it. That's based on a weekly pattern. On the daily charts, and we go over here and we'll just change that to a daily chart, look, as the market was making a low, look at the relative strength of the market was doing, making a high. In fact, it changed right here. So the relative strength of GE actually turned positive over a week ago. All I wanted to do was buy a simple pullback. You know, the low was 10, and we have orders to buy at 08. How did the market stop at 10? You know how? Because institutions saw our orders and probably got ahead of the market. But I want to point out one other item. From where the market closed, and where the market traded down to, I mean, who would have anticipated that pullback to begin with, right? So what I'm thinking is that somebody probably bought it, saw the breakout, placed their stops, got stopped out. We've got our bids in just right here at 1802, not far off the lows, for gosh sakes. And guess what? El no goodo, not filled. But the point being is, this is the style of analysis and trade ideas that we want to put out based on support and resistance. All right, gang? So what I want you guys to understand is, when I say that we've got some excitement coming in 2018, I think, you know, we're going to have to really address things moving forward. Now, what I would like to also say in conclusion, I thank everybody there. Even though the stock might go up, it tells you, you know what, you might take a short-term trade, but we aren't going to sink our teeth into what? A weakening trend in the marketplace. So when we have buy signals and you start to get at least maybe a sell signal on a bearish divergence, you might get, and for options trader and trading directionally for 2018 may be an exciting year, because with low volatility, buying premiums a little cheaper than what we would do for selling premiums. So we've got some exciting tools out there that I think it's not new. They're just ways to pick out information that's going to help us a little bit better. So In conclusion, I want to say, guys, if you're interested in more of our work, and if you want, I want to throw this out there as a special offer because something new we've done this year. As you can see, we have a very full plate, exciting opportunities, things that are going on, moving forward, ways of trading in the market. But if you want to take advantage of something, I've offered this not many times before. We changed things up this year. We have the weekly thoughts and observation stock commodity newsletter. Cumulative value last year was up 122%. The performance is listed, every trade on our website. You can always ask for information. We'll send you the link. Meanwhile, we also every week come out with the weekly thoughts and observation with trade ideas, entry, exit, stop loss, targets, and a lot more. In addition, we do a weekly video report. We send out email alerts to let you know. We actually tweet out that there was an email alert in case you are not in front of your email. And we also have a daily morning report in the live trade room with setups and trading opportunities. It's $129 a month. If you want to take advantage of it, I would certainly do this because I'm not doing this forever. We actually are moving into the managed fund business. And as we are wrapping up person Algo optimizer licenses, it's just been an exciting time. And I think in 2018, it's going to continue to be exciting as far as trade opportunities. So with that said, if you want to be a part of Person's Planet, take advantage. Go to personsplanet.com/report. Again, that's personsplanet.com/report. And then you can just click on the link, and at that point you'll be, and I'll push that into the trade room in just a second. And that gets you to right there, gang. And this might be, if you've wanted to take advantage of some of my stuff, say, hey, is it better than maybe and participate in the room? Is it better than the Wall Street Journal? Possibly, absolutely. So I would say, without a doubt, this is a way to get a good introduction on skills and training on how to utilize the PMC, the last conditional change, and that's where to find that website and that link right there. So I wish everyone a great rest of the month. We have exciting things coming out. Next week is our PUG membership meeting, and the guys, for PUG, you're getting the it's here, you'll have it next week, and we'll go through working that for the Trilogy scans for the buy and sell filters. So and then don't forget the Algo optimizer 14. The release date is the 24th of January, so the Algo optimizer version 14 with those LCC filters have been added. I thank everyone for your time. I hope you got something out of today, at least from a standpoint of what's happening in the market. You know, if you're actively trading, it is going to be, I probably think, one of the most fast-paced years, because computer algorithm order execution is one of the most key components. And you know, if we're gonna get one of these days where the market's gonna move, we want a system that's able to get us in the trade and get us out of the trade, or trailing stop features. And that's the sophistication of what we've come to in not just, but the era of where we're trading now. Bless you guys. Have a great rest of the year. If we don't see each other across paths, I'll be at the Orlando Money Show doing a 4-hour workshop, and then I may do a little stint up there at the Orlando Money Show, or Traders Expo, excuse me, in New York City. So with that said, stay warm, stay dry. Think about the folks out there in California. We've just had so many wild things happen in the last year and a half. It's been crazy, between hurricanes and mudslides. It's crazy. Stay good, everybody. Thank you all very much.